Hello guys and welcome to another video. My name is Mark, I'm an entrepreneur and property investor. Today you find me over in LA, but that won't stop me bringing you the latest news as soon as it comes out. Please give this video a big like, it really does help me out with the algorithm. And if you haven't already subscribed, as always, why not consider subscribing? We have our subscriber dividend portfolio, which has got about £13,000 in it now. Every single month, another £2 will be put in by myself, and the dividends from that will be paid out to you guys. I will be drawing another winner tomorrow on the 10th. And as always, this can provide an excellent supplement to any income you already have. I think last month was 20 quid, just to put it in context. Anyway, let's get into the house price index and what's been going on. So the first point is to mention that house prices have overall started to dip in the UK. Now, the headline figures are that they're down 0.3%. Now, anybody who watches this channel often knows that I have a portfolio, about £3.5 million, and we like to track that and track how much money I'm making or losing. So Tom, if you don't mind putting up the value from last month up there, and then how much I've lost this month, I'm sure it's about £10,000, and then my new portfolio value is now represented on the screen. I don't have access to it, so guys, I'm just gonna have to trust it's all being done. Now that doesn't really tell the full picture though, and when you go through the report in a little bit more detail, you start to see the nuances that really matter. There is a north-south divide, and it kind of makes sense, doesn't it guys? If you think about it, house prices are dropping because interest rates are going up. So in the areas where house prices were already higher, then the burden of debt and the burden of extra money being paid on interest is going to be greater. So when you actually look at it, and I think that I found an image earlier, that shows just how vastly different the story is depending on where you're looking at. So overall, down 0.3%, but anywhere from the Midlands up is still growing. There's still a lot of house price growth out there. It's just anywhere from sort of Oxford downwards, house prices are starting to shrink. And just to illustrate that, I've got a property up in Sheffield, recently remortgaged at 4.5%. You would think that's a killer mortgage. The mortgage is only 85 grand. It's not a big deal. We're only talking about an extra couple of £100 a month. However, if I was doing a property down south where maybe I've got 300, 400,000 pounds lent out, then suddenly the mortgage is going from 400 to 800 or 900. That's a big, big jump. Well, no, the mortgage. And the mortgage is going from 600 to maybe 1,200 or 1,300. That's a big, big jump. And that makes a big difference to people's budgets. And when you're looking at repayment mortgages, which are starting to come back round, these amounts are much, much higher, especially when down south you consider the average house value, if over the whole of the UK is 286,000, it is at the moment, I just had a look at my laptop in the corner, 286,000 at the moment, down south it's probably more like 350, 400. So the amount of debt on those properties will be much, much greater. So what does that mean for me as an investor? Well, I'm continuing to buy where I'm continuing to buy. I bought a house last week up in Sheffield. I will continue to look for more. And if you want to connect with me and learn a bit more about that, feel free to drop me a DM on Instagram. We can have a chat. I try to reply to as many people as I possibly can. I don't try and upsell anything. There's no such thing on my channel. It's just a case of making sure that I can connect and give you some tips of what I'm doing. And then if you want to go and do your own thing, feel free to. So with the Halifax data, there often is some extra notes, and I want to go through that. So the HMRC have said that in March, the amount of transactions has bounced back. So that's really good news. The housing market is starting to transact a little bit more freely, but it's not a huge jump, it's up 1.3%. So whilst it is significant, it's certainly not huge. Now the Bank of England has much, much more optimistic news. Mortgage application approvals were up 17.9%, so that is a very significant jump. That shows that people that are in the process of buying, getting approved on mortgages, are increasing month on month by a significant jump. And that means that buyers have returned to the market, feel more comfortable mortgaging, and maybe people are doing remortgages more comfortably. Whatever it is, mortgages have jumped, and that can only be positive for the property market. And the last bit of information on that report is the RICS. They are saying that there are slightly more buyers returning to the market. I think there's a movement of about 1%. Again, not huge. So we've got the HMRC saying transactions improving by about 1%, RICS saying buyers are returning by about 1%, and then we've got the Bank of England saying that mortgage approvals are up 17 odd percent. So that's a huge jump from the Bank of England. I think that's incredibly positive. Now, what are my predictions moving forward? Well, look, America has just increased interest rates. It is highly, highly likely that the Bank of England will follow suit. That means more misery for people who are borrowing money, including myself. We are getting hit harder and harder. Now, the silver lining to all of this is rents are also increasing. And especially in those areas, as I mentioned, for example, Sheffield, Northamptonshire, I've got houses in Wellingborough, Corby, Kettering, all across Northamptonshire actually. And all of those areas, actually the ROI is improving every single month because the property prices are increasing because they weren't that high anyway. You know, in Kettering you were buying an average 3-bed for about 130 about 2 years ago. Today it's about 180 to 200,000. So it's still significantly lower than that average in the UK of 286. So that area, we're still buying fairly reasonably priced properties, good properties, and we're renting them out for over £1,000 a month on a single let basis. HMOs, still a little bit tricky with energy prices, but that's starting to come back into play, starting to reduce, so I can see brighter skies ahead for HMOs. Up in Sheffield, for example, rents, we are pushing higher and higher boundaries. The ceiling for a 3-bed was about £800 a month. It's now about £950 a month. And that's a change over the last year, it's a huge change really. Let's face it, it's about a 20% increase in the last year. And that really does eat up any of those issues with mortgage payments increasing. Guys, as always, give this video a big like. It does help me out with the algorithm. I massively appreciate every single one of you. I will be back on Saturday to draw the winner for our subscriber dividend portfolio. And guys, from LA, thank you so much for watching. We'll see you soon. Cheers, guys.